Welcome back to FCL Accountants Tuition Center YouTube channel. My name is Randall Franklin. I am the lead tutor, Chief Executive Officer, and the pioneer of FCL Accountants Tuition Center. In today's video presentation, we are going to look at the preparation of the trial balance and the preparation of the suspense account. Before I get started, I just want to mention that today's video presentation is relevant to students doing SCCA F3, Financial Accounting, and students doing CA 1.1 under Zika, and also students studying CIMA BA3, Fundamentals of Financial Accounting. Also, the students that are studying degrees, diplomas in accountants at the elementary level, this topic is very relevant. Before I get started, I just want to encourage our viewers to ask questions relating to today's question in the chat box, and all the questions will be attended to depending on the availability of time. If your question is not attended to, it simply means there were too many questions, and due to lack of time, we could not manage to address all the questions. I also want to encourage you to make comments in the comment section about the quality of this video. All the comments made will be taken very, very seriously in trying to improve the lecture delivery. So now I want to get started. The first thing that I want to do is on the preparation of trial balance. It is important to note that you debit, this is very important, you debit, that's an abbreviation for debit. Debit all assets. All assets are debited. All expenses are debited. And all costs are debited. So we are looking at all assets. Then all expenses. And then we have all costs. So when you're preparing the trial balance, ensure that all assets, both current assets, non-current assets, all expenses, all costs are debited in the trial balance. Then credit, abbreviation for credit, all liabilities, all liabilities are credited. We have also all provisions, all provisions, or all allowances. Now, when we talk about provisions, normally we are referring to provision for depreciation, provision for doubt, bad debts, or you can use the term allowance, allowance for depreciation, allowance for doubt debts. These are credited. Also, we have capital. Also, we have revenue. The revenues and gains. So that's how you prepare the trial balance, where the examiner gives you a list of the balances and requires you to prepare the trial balance. So we have addressed that. So in this question, we have a list of the balances here. Mwalula, a sole trader with a small business. Below is a list of balances of the trial balances extracted as at 31st December 2021, which failed to agree. So when the trial balance fails to agree, then the difference is suspense. So we can now look at this question because we are asked required prepare the trial balance for Mwalula as at 31st December 2021 and derive the balance in suspense account as at 31st December 2021. So we go by the rules. So we have here now the trial balance. The trial balance here is, we have the debit, and we have the credit. So if you check purchases, that is a cost, it should be debit, 66,450. Then payables, that's a liability. That is 44,520. Discount allowed is an expense, debit. Discount allowed, that is 2220. Then we have sales, that is revenue, credit. Sales 213, 390. Then receivables is an asset. Receivables is an asset. We have 158, 550. Sales returns. When you sell goods and then they return, it must be debited. Sales returns 63. Because it's a loss when they return the goods. Expenses, we said it's debit. The expenses there is 32,130. Bank overdraft is a liability, credit. The bank overdraft there, we have 94,20. And then we have capital. Capital, we have 37,500. We said capital credit. VAT liability. It's a liability, so you credit 18,960. So you check the side which is bigger. There, it should be, the debit side looks bigger. So we can confirm. Suspense is the missing figure. So if you add, there is also non-current assets. put it there, non-current assets, you debit 68,250. So if you add on the debit side there, you get 333,900. You transfer the total there. The suspense here, when you add all these from there, there is the difference of 10,110. That's what goes to the suspense. So that is how you prepare the trial balance when you are given a list of balances. So now we go to the next question. The next question here is the preparation of the trial balance. So we go to prepare a suspense account as it would appear in Mwalula's books. So we have the first point to note is that if the trial balance does not agree, like in this case, it didn't agree, there is a suspense of 10,110, which is on the credit side. Therefore, even in the suspense, it will be on the credit side. So we go to the suspense. We can clear that part. So we go to the suspense. Suspense account. The shortfall was on the credit side, so that's where you bring it, the balance brought forward. 1110. So now you go to the mistakes. The total in the purchases day book was 126,450, but the figure used when posting to the purchases account was 66. So you go to the purchases account and try to see the mistake made. In the purchases, this is a cost, therefore it's debit. The purchases account, this is payables. We bought on credit because there is the day book. And we recorded 66,450. So the difference there will go to the suspense. The difference there between 126,450 and 66,450 is 60,000. So we have debited the purchases account. We are going to credit the suspense. This is coming from purchases. 60,000. Then we got to number 2, an invoice from a supplier for goods amounting to 25,500 plus VAT at 16 was not recorded in the books of Mwalula. So if it's not recorded in the books, then it's not going to affect the suspense account because there's no debit, there's no credit. This is what we call error of omission. When a transaction is completely omitted from the books, it does not affect the suspense account because it does not affect the trial balance. So this was not recorded. During the bank reconciliation process, it came to light that 225.2 was earned in interest during the year. and this amount has not been accounted for. Has not been accounted for. So even this one won't affect. A review of Mwalula's ledger revealed that receivables were overcast by 75,720. So overcast is an error which affects the trial balance. So we check here. This is receivables. Receivables. Overcast simply means the debit side is more because receivables is an asset. Therefore, if it's overcast, to make the correction, you credit. And this will go to suspense. Suspense 75, 720. And here we have credited. In the suspense, we are going to debit. Receivables. 75, 720. And then we got to cash drawings by Mwalula of 5610 were treated as cash sales in error. So this one, it will affect. So we have sales. It was treated as what? Sales in error, which was error in error. So it will be cash drawings of that were treated as cash sales in error. So there it was put here. So you must be able to remove it. So it was cash there, 5610. This is supposed to go to drawings account. So there you say suspense. 5610 to remove it from there. So now in the sales you debit, in the suspense you are going to credit. This will be coming from sales. 5610. There we have 75, 720. It also agrees. 75, 720. We have cleared the suspense. So we have addressed both questions, preparation of the trial balance and preparation of the suspense. So for today, we can end here. Thank you very much for watching this video. And on behalf of FCL Accountants Tuition Center, I want to thank our viewers, both the new subscribers and the old ones. You are supporting us. We say thank you and God bless you beyond measure.